Once again, we are back with them Hollywood trades. EUGU DXY. I'm gonna try to handle that all at once right here. This week we are post NFP and we are action packed. I'm definitely gonna try to do some more action this week myself. Work has been slowing down, so I am looking forward to getting into some action. Funny enough, this is the 4 hour. I didn't want to start with the 4 hour here on Forex. We like to start with the weeklies and the dailies for sure. This is crazy. Did I not see? So what happens when you don't look at those? I actually mark the daily. I believe, if I'm not mistaken, over the weekend, I did mark these marks. And this is, I want to just zoom in on this because this is a very auspicious zone here, because the lack of fair value gap on the daily here is going to let us know that we are definitely in an extreme consolidation here. And when you zoom in on this, this is pretty much, I mean, scalpers have been pretty much, there's no real conviction one way or another, as we do in the bar method, break and retest or rejection. We do have the highest bar here. This would act as a stop hunt level. You would expect it. It did do a small displacement on Friday below that level, but then you would expect this is just the highest candle is not going to be taken down easily, especially without a mitigation, unless you have real cause to just tank the price, which right now we really don't. The DXY is still hanging in its low, so no reason to think that the DXY is just gonna just blast off out of nowhere. And so this is our inside bar. This bar right here is our mother candle, and we are just existing inside of this mother candle. We can use all of these levels, break and retest. So we broke these levels. We're going to retest these levels. We can also retest this level here. It's looking like we can go there. Actually, this being the highest candle, I'm going to mark this whole candle off right here. This is pretty much the whole candle we can expect for the week. For the bearish order block, this is going to be scheduled as a bearish order block until further notice, but pretty much we expect this to be a resistance level or zone, I should say. Here again, retesting this and this, we're allowed to retest. We're pretty much allowed to stop hunt this candle as well. You just, when it's a bearish order block, you don't expect it to close above it. If it does act as a bearish order block, you want to see sensitivity at its halfway mark, as well as it's the 3/4 of a way up plus this. You just don't want to see it close past this. And so that's pretty much that. This mitigation block right here, as you see I have marked out, is acting as a no close below zone as well. So between here and here is just pretty much our dealing range for the EU. Again, we looked at our 4 hour. We do have a bearish imbalance in there as well, but we did close over this candle as well with a little bit of displacement. So what we're gonna do here is we'll just mark this level. We want to monitor this bullish key level, or we want to monitor it as a bullish key level order block type of deal. The same way this candle did here. This body is going to be, the body is always the strongest part, but we're going to, for right now, right, it dipped into it and it did use it as a bullish promotion and leave behind just a small sliver of bullish imbalance there. I'm not going to mark it, but as right now, I'm more so, I want to see what happens when we come up into this. We are, and went impulse expansion, right? Failure to close over here. I don't like marking all this stuff, but I'm going to mark this. Has a sweep point as well. Keep that tidy. Because it did fail to close over that point. So expansion failure, displacement, sink back into the zone. We did get a bullish close after this Fibonacci retrace. Basically, RTL return to origin. Fibonacci retrace would have been somewhere up here. But basically, the RTO was successful. We did get a bullish close over that lowest dipping block. And so now we exist within this dealing range from here to here. We can't expect it to pretty much absorb all these highs. I mean, these are just pretty much easy targets. We want to watch what happens here as well, because this is the body that has a bearish imbalance inside of it as well. So we're going to be monitoring that. And that's pretty much that for EU. Let's go over to GU, as this is going to be our SMT. I don't have any markups for GU. I haven't been watching GU at all. I think we're existing inside of a bearish order block of some sort on a higher time frame. That wouldn't really be expecting anything but a mitigation of it. So this is the daily. This is what we have. We corrected this zone right here. This zone was under correction. So this zone did get corrected. And so what we have here is a balanced price range. Again, if you balance the price range and fail to close below it, you can pretty much bet that this was going to be taken afterwards. Boom, that happened. Failure displacement, but sweep. So pretty much keep that tidy. DOL exit. Haven't updated this one at all on this chart, but that's pretty much that. We do have the bearish order block. It's retesting all of this, so this all should act as mitigation as well. Same as with EU. So let's mark that midline. Very much interested in order block mid levels. So basically, from now until Friday, the way it's charging, I'm definitely, because it did close over this block. So we did get a mitigation of this block, a testing of its low, a respect of this low here after it swept it, and we're coming back up. So we do have, and I'm going to actually bring this over, because when you're inside of a balanced price range like that, you can still use that zone as support. So pretty much we're still in a supportive zone as well as far as this all goes. We're in an uptrend, so we can easily, highs are just easy targets in uptrends. So definitely 100,000% expecting this to be swept, and maybe this to be stop hunted, and then we'll monitor from there. But we're pretty much bullish. You wouldn't be trying to sell right here, even though we got the bearish close. And I always say you switch your bias when you get that bearish close. But there's always that last opportunity, and this is going to be in the next publication, Advanced Tactics and Secret Mechanics, because even after you get that close, even in the bar method, when you break and get that displacement, and then you expect a mitigation. So a retest, you expect a retest of those levels, for those levels to prove that they are now bearish levels, even this level here. And so, but what does that mean? Your trade opportunity is still bullish, right? And so we'll be seeking those bullish plays, right? We respected all of this. We wicked it. We wicked that last liquidity level that exists within this bearish block here. Wicked it. What do you get? That's your last stop hunt inside of your bar. Boom. What do you get? You come back up, taking all of this, taking this. This is all LR. None of this has been swept. Unswept, 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 untested. So that's pretty much that. No fair value gap to even push us back down. And now we're going to develop a bullish fair value gap right here as well. So this can come up, hit that, boom, sweep that, and then we'll see. I expect a range failure displacement, but you never know. We're just bullish. This is a bullish continuation level, higher high, all right, high, low, high, higher low, higher high. We can just keep doing that. That's pretty much that. I'm going to take a look at the infamous DXY here to get us out of this. We're what, 10 minutes in? Not bad. And this is pretty much it. This is where we end our journey. DXY is retesting the block here. And again, it doesn't look like it's going to respect this level here. What I'm going to do is I'm actually going to bring that down to the body level right there. And so we'll see what happens at that body level. This is the body level of the lowest candle. And it's a short body. The shorter the body, the more acute the liquidity will be. The mid level is going to still be act as a 50% of that body, and that low is right there. So all these levels are right there. That's the benefit of having doji or spin tops. All of the levels are right on top of each other. So you get to see, is it going to just go through them and then try to seek its low, or is it going to respect them sharply and then use that as support? So this is all a bullish order blocking zone. And then as you see, this, if we do go bullish, if we do respect these levels as support, any of these levels here as support again, we got target. This is going to be our primary. This is our LR, these three, and then this, and then eventually trying to scale up this right here, because this is actually some type of void, because we closed here and it opened here, and that void caused a collapse. It wanted to throw a body back over that right there after a retest of this bearish order block, sharp bearish order block, two of them right there, unmitigated, boom, and then that's what we got. So we'll see. We are bearish. We could easily just blast through these lows because we are bearish. Same with the highs on EUGU. So that's pretty much that. As we see, we are respecting this 50% line, no closing below the 50% lines, no close below this primary support established right here. So yeah, that's pretty much it. We'll see what the week has for us.